Welcome to the Deep Dive. We've got the Q1 2025 earnings transcript for Evolution Gaming here, and our job is to really cut through it all and pull out the key insights for you.
Exactly. We're going straight to the source, what the company actually said about their numbers, the challenges they're facing and what they're seeing ahead, helping you get the main takeaways without reading the whole thing.
Okay, let's dive right in then. Those headline numbers for Q1 2025. So top line, net revenue, $520.9 million.
Right. And compared to last year, that's growth 3.9%, maybe a bit softer than some expected.
Yeah, and you have to account for currency, right? FX had a negative hit.
It did. If you look at it on a constant currency basis, the growth was a bit stronger, 6.1%. So FX definitely played a role there.
Okay. Then we look at profitability. EBITDA, that's earnings before interest, taxes, depreciation, and amortization, sort of the core operational profit metric, $342 million.
And that was actually down slightly year over year, about 1.1%.
Which means the EBITDA margin, how much profit they make from each euro of revenue, that came in at 65.6%.
Yeah, and that's like right at the bottom end of their full year guidance. They've been guiding 66% to 68%. So Q1 landed low.
So, okay. Slower revenue growth, a little dip in profitability, margin pressure. The actual bottom line profit for the period was $254.7 million.
Which works out to earnings per share of 1.24. That's just a cent lower than last year's 1.25.
So why the margin pressure? Let's dig into costs a bit. Operating expenses were up.
Yeah, OPEX overall was up 15% compared to last year. The biggest piece is always people, right? Personnel costs jumped 12%, almost $120 million, mostly because they're hiring so many people.
Growing headcount significantly. What about other costs?
Other OPEX also saw a pretty big jump, 21% to $59 million. They did call out higher legal costs as part of that.
Anything else driving costs?
They also mentioned something about actions they took in Georgia last year. It resulted in a less favorable resource mix compared to Q1 last year, which basically means it cost them more this quarter relative to then.
Got it. Okay, shifting gears to investment. CapEx. What are they spending on building things?
Total CapEx in Q1 was $33.6 million. Pretty balanced split, actually. $16.6 million on intangible stuff like game development, platform tech.
And the rest.
And $17 million on tangible assets. So building out studios, buying equipment, they're guiding for about $140 million in CapEx for the whole year.
Okay. And despite that margin pressure, how did cash flow look?
Cash flow is actually a real positive. Operating cash flow, even after those investments, was strong at $327.7 million.
Nice.
Yeah, and cash conversion was solid too, 87%, meaning most of that profit became actual cash in the bank. It was better than last quarter and last year, partly because they got better at collecting receivables, money owed to them.
So that leaves the balance sheet looking pretty healthy.
Oh yeah, very strong. Ended the quarter with nearly $970 million in cash and total equity over $4.2 billion. They're in a good financial position.
Okay, so those are the numbers. Slower growth, some margin pressure, but strong cash flow and balance sheet. The big question is why the slowdown and the margin hit?
Exactly. And management spent a lot of time on the call explaining this. They pointed to two main things really impacting Q1 results.
Right. First one was this European ring fencing. Can you break that down? What is it? And what did they say about the impact?
Sure. So this is basically Evolution being proactive. It's not necessarily regulators forcing them yet in most places. They're putting technical blocks in place so their games can only be accessed by players through operators who have a local license in regulated European markets.
They already did this in the UK, right?
Yeah, they've done it there for a while. But in Q1, starting around early February, they rolled it out across pretty much all the other key European markets that have local licensing systems.
Okay, and what's the effect of doing that proactively?
Well, it really depends on something they call channelization. Basically, how good are the regulators in a specific country at getting players to use the licensed sites instead of gray or black market ones?
Ah, okay.
So in markets where channelization is high, most players are already on licensed sites, the impact was pretty minimal. But in markets with low channelization, where lots of players were accessing Evolution games through unlicensed operators, well, when Evolution cut off that access, they saw a noticeable drop in revenue.
So they're essentially cleaning house distribution-wise, potentially giving up some revenue now for a more compliant, sustainable base long term.
That's exactly the strategy. They stress they support regulation, think it's good for the industry long term, but, and this is a big but, the success of it and their ability to grow from this cleaner base really hinges on the regulators getting the rules right.
What do you mean getting the rules right?
Things like tax rates, restrictions on players. If the regulated market becomes too expensive or too difficult to operate in, or too restrictive for players, players might just vanish,
Yeah.
Go find something else to do or find ways around it. So management was clear. Regulators need to find that sweet spot, that right balance to make the license market attractive. This whole ring fencing move is kind of a bet that regulators will eventually figure that out.
That's really interesting. A strategic gamble almost.
Yeah.
Okay, so that's the European situation. What was the second big factor they talked about?
The other major headwind was what they called Asia cyber activity. It's basically an ongoing fight against criminals using cyber attacks or exploiting their network in the Asian region.
And fighting cybercrime hurts revenue. How does that work?
It's tricky. The steps they have to take to block this criminal activity, technical measures, sometimes shutting down parts of the network temporarily, it inevitably has knock-on effects. They said they're making progress, but it's a constant battle.
And the result for Asia's numbers?
The result is that revenue in Asia has basically been flat for 3 quarters straight now.
Wow, flat for 3 quarters in Asia. That's usually seen as a huge growth engine. What's the plan there?
Well, they described it as working on 2 things at once. 1, the technical side, shutting down the bad actors. 2, the commercial side, trying to grow the legitimate business. The CEO basically said, right now, the amount they have to take away by shutting things down is pretty much canceling out the increase from legitimate growth. That's why it's flat.
Hard to quantify, I guess.
Very hard, they admitted. But they feel they're getting better at the countermeasures and expect eventually the growth part will start to outweigh the shutdown part. But for now, it's a drag.
Okay, so putting it together, proactive ring fencing hurting Europe in the short term, and this ongoing cybercrime battle keeping Asia flat, both hitting the top line and probably the margins too.
Absolutely. Management is effectively saying, look, these actions are hurting the numbers right now, but they are essential for the long-term health of the business and, crucially, for widening their lead over competitors.
Yeah, the CEO was pretty blunt, wasn't he? Said he wasn't happy with 3.9% growth. They can do better.
Right. But then immediately pivoted to say, these measures, the ring fencing, the cyber stuff, they're fundamental to the mission. The mission being to increase the gap to the competition. It's prioritizing that long-term competitive advantage, that moat, over maximizing this quarter's margin.
And you definitely see that investment focus when you look at their expansion plans. Headcount is way up.
Yeah, over 22,000 employees now. That's up more than 8% from last year. They're clear they need more people, more studios, more capacity globally to meet demand.
Hiring big time in Brazil and the Philippines, you mentioned.
That's right. Big recruitment drives there because they're opening major new studios in both those countries later this year.
What else on the studio front?
Well, they just opened one in Romania, partly to replace capacity lost from Georgia. And besides Brazil and the Philippines, they're opening a second studio in Michigan. Plus expanding pretty much everywhere else: Malta, Colombia, Argentina, New Jersey, Philadelphia. They said expansion is running at full speed.
That's a lot of building. They also mentioned a metric, the Game Rounds Index. What did that show?
Yeah, that tracked the sheer volume of game rounds played across their network. It was up almost 11% in Q1. They linked that mainly to their game shows getting more popular.
But more rounds doesn't automatically mean more revenue, especially with these other issues.
Exactly. They caution that the index doesn't always map directly to revenue in a single quarter. You could have more rounds being played, but maybe the average bet size is lower, or the revenue per round is impacted by things like the ring fencing or the mix of games shifts. It suggests underlying player activity is healthy, but the money flowing from it is being affected by these other factors right now.
Makes sense. Okay, let's look at the regions then. How did this all play out geographically? Europe first, where the ring fencing hit hardest.
Yeah, Europe was flat compared to last year and actually down 6% compared to the previous quarter, Q4. That really shows the ring fencing impact biting.
But they still think underlying demand is okay?
That's what they said. Strong underlying demand, but this cleanup process is underway. They expect Q2 will feel the full impact since the rollout was mostly in Feb, so Q2 gets a full 3 months of it. Then they hope the second half of the year looks stronger for Europe as they sort of normalize from this new base.
Okay. Asia hit by the cyber stuff? Stable quarter on quarter, you said?
Yep, stable sequentially and just 2.2% growth year over year. So, like we discussed, demand is probably there, but the ongoing issues are just keeping growth capped for now.
North America, still the bright spot.
Seems so. Strong performance, up 15% year over year. They still talk about it being early stages, finding new players. They specifically mention expanding their deal with Bet365 in New Jersey, which is a positive sign.
And LatAm.
LatAm grew almost 10% year over year, which is good, but it was slightly down compared to Q4. They pointed the finger mainly at Brazil's new regulations kicking in.
Teething problems with the new regulation.
Pretty much. A huge market, obviously, but maybe a slower start than expected as everyone adjusts. They did say activity is picking up now, and LatAm outside of Brazil is doing really well. Given Brazil's size, the long-term potential is still massive despite these initial regulatory bumps.
And other regions, like Africa?
Also showing good year-over-year growth. And one interesting side effect of all this, especially Brazil regulating, is the share of revenue coming from regulated markets jumped up significantly. It's now 45% of their total net revenue.
Wow, that's a big shift. Okay, let's talk products. They seem excited about the pipeline.
Very excited. Called 2025 a product leap year. They're planning to release over 110 new games across the whole group. That's a huge number.
They showcased stuff at ICE in Barcelona back in January.
Yeah.
Any recent launches they mentioned?
Yeah, a few Q1 or early Q2 releases like War, Racetrack, Batstacker, Blackjack. And apparently a simple game called Marble Race, which is just betting on virtual marbles, took off surprisingly well after launching in April.
Huh. Okay. Any big ones coming up they teased?
They mentioned two specifically. Super Color Game, a dice game they said has a potential 1,000 times multiplier, and something called Ice Fishing.
Ice fishing?
Yeah, they described it as a really spectacular, different kind of speed game show. It has a unique money wheel that looks like icy water, and the live host actually catches multipliers. Sounded quite innovative.
That's interesting. What about the RNG side, the slots?
They launched 17 new RNG games in Q1, planning another 19 for Q2. Overall, RNG growth was a bit muted, only 3.1%, but management feels the underlying quality and strength is improving. They gave a big shout out to their No Limit City studio.
Oh, yeah?
Specifically mentioned a game called Duck Hunters, released in February, said it had a tremendous start, one of the best launches they've seen. So pockets of real strength there.
Okay, so let's try to wrap up the management perspective.
Yeah.
They know Q1 was slow financially.
Yep, acknowledged it directly, said it was because of these strategic choices, the ring fencing, fighting cybercrime, plus all the investment and expansion in product. That's what pushed the margin down to the low end of the range.
But they're still confident about the full year.
Very much so. The CEO sounded bullish on 2025 overall, pointed to that huge product roadmap, the studio build-outs, and what they see as strong underlying demand just waiting to be fully tapped once these temporary issues ease. Still all about widening that competitive gap.
And the new CFO, any initial impressions?
Yeah, he joined in February, said it's a fantastic company, great team, solid processes. His approach seems to be about making small, continuous improvements, not shaking things up dramatically.
And the big one, they kept the full year EBITDA guidance, right? 56% to 68%?
They did. Maintained it, said it's still their best estimate. They clearly expect the second half of the year to be stronger than the first. The logic is Q2 takes the full hit from the ring fencing rollout, and then hopefully things stabilize or improve comparatively later in the year.
What about shareholder returns? Dividends, buybacks?
Still committed. Proposed a cash dividend of $2.80 per share, and the share buyback program is ongoing. They bought back over 154 million Predinger worth in Q1, with a plan for 500 million for the whole year. So definitely returning cash to shareholders.
And lastly, that UK Gambling Commission review. Any update?
Just that it's ongoing. They said cooperation is good. They've given the information requested. But timing, outcome, that's all up to the regulator. No news yet.
Okay. So if we step back from all those details,
Yeah.
what's the core story coming out of this earnings call transcript?
I think it's a story of deliberate strategic pain now for expected gain later. The Q1 numbers look soft, yes, but it wasn't really a surprise to management. It was a direct consequence of proactive choices like the European ring fencing and the ongoing slog against cybercrime in Asia.
And understanding those specifics, like why ring fencing impacts revenue based on channelization, or how fighting cybercrime creates drag, it gives you much more context than just looking at the 3.9% growth number, doesn't it?
Yeah, absolutely. It shows you the strategic calculations they're making, betting on regulators getting it right eventually, committing resources to clean up markets, even if it hurts now. You see the complexity of these operational challenges.
Yeah, at the same time, they're not pulling back on investment. They're building studios, hiring people, planning this massive product launch.
Exactly. They're absorbing these headwinds while simultaneously investing heavily for the future. The bet is clear. These actions, combined with the investment, will solidify their leadership and lead to stronger growth once these transitional impacts fade.
So a picture of short-term friction caused by deliberate strategy, all aimed at that long-term competitive advantage.
Right. And maybe something for you, the listener, to think about is that tension. How do companies in this space, or any space really, balance taking necessary but painful proactive steps against immediate financial results? And looking at Evolution specifically, how much does their future growth in regulated markets really depend on those regulators managing to find that right balance they talked about, making the licensed environment attractive for everyone?
Some interesting food for thought there. This has been our deep dive into the Evolution Gaming Q1 2025 earnings call transcript.
We hope drilling down into the details gave you a clearer picture of what's driving the company right now, directly from their own perspective.
We'll catch you next time on The Deep Dive.